President Trump says US-China trade talks result in agreements covering rare earths and magnets and Chinese students. US inflation surprises to the downside in May, supporting rate cut expectations for later this year. And Australian consumers look to spend again. That's coming up in our 5 Things in 5 Minutes on Thursday, June the 12th. And then in our deep dive interview, ANZ Economist Arindam Chakraborty explains ANZ Research's call that the Philippines should pursue a lower exchange rate.
Remittance inflows have led to real currency appreciation and contributed to Dutch disease, making exports less competitive. As a result, the share of manufacturing in GDP has declined.
But first, in 5 and 5 with ANZ, I'm Alex Tarrenton for Bernard Hickey. US President Donald Trump has said the trade talks between China and the US have resulted in a deal. This will include magnets and rare earth shipments from China, with Chinese students being able to attend US universities. The deal is still to be signed off by Trump and Chinese President Xi. ANZ economist Bansi Madhavani says from London that while the news is positive, markets are still looking for further detail.
What we know about the talks is that, both the sides of the trade delegations have agreed to a preliminary framework on how to implement the consensus between them in Geneva in mid-May. That proposed framework now awaits approval from both President Trump and President Xi. There's limited details available so far, but what is encouraging is that the talks have concluded with a positive tone. Markets still seem to be somewhat skeptical about what the final outcome could look like. The reaction, therefore, to the news was somewhat muted, and I reckon markets need to see more details for that.
At 4 a.m. Sydney-Melbourne time, the S&P 500 was flat. The 10-year US Treasury yield was down 6 basis points at 4.414% after softer CPI data. Gold was up 0.06% at $3,345 an ounce. West Texas Intermediate futures were up 3.63% at $67.34 a barrel. That was on trade talk news and developments in the Iran nuclear talks. The US dollar index was down 0.47%, but the Aussie dollar was also down 0.03% at 65.21 US cents, and the Kiwi was down 0.17% at 60.44 US cents. Number 2, questions still remain on whether current tariff rates can or will go lower. Comments from Trump and the US Commerce Secretary indicate a 55% tariff will remain on Chinese goods. Here's ANZ economist Vicky Xiaozhou.
We believe both sides appear to have incentives to de-escalate trade tensions from here. The outcomes from the trade talk will be favorable. More importantly, we are closely monitoring the upcoming G7 summit from this Sunday, where the US may reach trade agreements with other countries such as Canada and Japan. We will be watching for any clause that could potentially exclude China from the global supply chain.
Number 3, in the US, CPI inflation surprised to the downside, with core CPI up just 0.1% in May, against the 0.3% expected. Headline CPI was also up just 0.1%. Bansi says the softer print indicates businesses are holding back passing higher tariffs on to consumers.
Now, ahead of the FOMC meeting next week, the big question is how long the Fed can wait before cutting the policy rate. Our view is that the FOMC are unlikely to act based on just 1 month's data, but this data does pave the way for them to eventually ease monetary policy. We expect that the FOMC will note that inflation momentum has been good, but at the same time keep emphasizing that more patience at this stage is warranted. So our baseline forecast still remains that the FOMC will resume cutting rates in September.
Number 4, ANZ Roy Morgan Australian consumer confidence rose 0.3 points to 86.7 last week. ANZ economist Sophia Angala says the time to buy a major household item subindex rose to its highest since April 2022. Economic condition readings were a drag, though, after a weak Q1 GDP reading.
We do think that the economy is in better shape than the headline number suggests. The GDP data showed robust yearly growth in household disposable incomes and a per capita rise in real incomes, pointing to household resilience in aggregate. So that rise in disposable income should support the upward momentum in the ANZ Roy Morgan Consumer Confidence Series in the coming months.
Number 5, New Zealand's net migration downturn since 2023 may be nearing a turning point. Provisional data yesterday showed a seasonally adjusted net migration gain of 1,800 in April. ANZ senior economist Matthew Galt says that continued a stabilisation seen since mid-2024.
If migration does start to turn up, we'd expect that to provide a bit of support to the housing market and the rental market in particular. In New Zealand, we've seen very weak rental inflation lately, around a 15-year low. But the biggest story for the housing purchase market in the coming years is going to be how much lower interest rates transmit to house price growth and how quickly that happens.
Matthew Galt there. Now in our deep dive interview, ANZ Economist Arindam Chakraborty says an overvalued peso has led to deindustrialization in the Philippines. He says policymakers there could reverse that by pursuing a fairer or undervalued currency.
Economic growth in the Philippines has generally trended higher over the last few decades. Most recently, it recorded an average growth of 6.4% in the decade prior to the pandemic. However, the industry sector and overall productivity have stagnated. The growth has mainly been driven by an expansion in the services sector, while the share of manufacturing in GDP has actually declined.
And you say in your note that the Philippines has experienced that deindustrialization. So just walk us through that and your charts on like manufacturing share of GDP sliding.
The growth model of the Philippines actually has always been reliant on income generated by labor exports and remittances. So these remittance inflows have led to real currency appreciation and contributed to Dutch disease, making exports less competitive. As a result, the share of manufacturing in GDP has declined from a peak of 23% in early 2000s to 18% in 2024. This has been accompanied by a falling share in global goods exports, which is nearly halved to 0.3% in the past 25 years. More interestingly, such deindustrialization is occurring at a relatively low per capita income and is despite electronics accounting for a significant share of total exports of over 50%. Generally, a higher share of electronics is associated with stronger export performance and productivity growth.
In your note, you say that the peso is overvalued and contributing to all of this. So you've recommended them move towards a fairer value of the currency. How have you gone about looking at what the fair value is for the peso?
We have used two popular methods to determine the peso's fair value. The first one is a productivity adjusted real effective exchange rate, and the second method is the macroeconomic balance approach developed by the IMF. Both these approaches showed that the Philippine peso has been quite overvalued since 2019, and as a matter of fact, an overvalued currency weighing on competitiveness in the Philippines is not a new theme. Existing research from the World Bank also revealed that an overvalued peso has impeded the growth in a Philippines tradable sector in the 1980s and 90s as well.
So what could be done to devalue the currency and what parts of the economy would this support? But on the other hand, what risks would there be in doing this?
The widening current account deficit in recent years has exerted downward pressure on the peso, and the ongoing monetary policy easing will also likely help maintain a weakening pressure. But to pursue an undervalued peso on a durable basis, the BSP will have to accumulate foreign exchange reserves. More notably, pursuing a weaker real exchange rate comes with the risk of increased external debt servicing costs and higher imported inflation. So in that regard, Philippines' net international investment position as a share of GDP has improved significantly over the past decades. Inflation too has structurally declined and become much less volatile. We therefore see an improved scope for pursuing a weaker exchange rate at the moment. Also, higher FX reserves will make it easier for the BSP to stabilize the exchange rate in case of any adverse external events, and it would also provide greater flexibility on monetary policy.
Arindam Chakraborty there. I'm Alex Tarrant in for Bernard Hickey. That was 5 and 5 with ANZ for Thursday, June the 12th. Catch you tomorrow with further reaction to those US-China trade talks.
This podcast contains general information only, not investment advice. You should obtain advice for your personal circumstances before making any investment decisions. Please view the podcast disclaimer available via your media player or email.